Good morning from our global headquarters in New York City. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. Trade deal anticipation. Equities get a boost as President Trump teases a major deal with the UK to be announced this morning. A win for chip makers. The Trump administration will rescind Biden-era AI chip curbs after industry opposition. And the Fed stays put on rates, waiting for more clarity. The Bank of England decision up next. So it is that hope of a trade deal that is lifting us for another third consecutive day of gains this morning. We're up nearly 1% for the S&P 500, more coming from the NASDAQ. 10 a.m. is when Trump teased some sort of major trade deal. The reporting suggests that it will be the UK. Also getting some extra juice from a Bloomberg scoop yesterday that some of the Biden-era AI chip curbs will be rescinded. But what does it get replaced with? We're asking those questions later. Buying for now 1.3% is how much higher we are on the NASDAQ. All of that overshadowing a Fed decision yesterday. That stagflation was the clear concern flagged by Chair Powell. Even if he didn't say those exact words, but talking about the tension in the dual mandate. He said some form of weight 22 times. And in fact, the bond market shrugged. Two-year yields had the smallest reaction, the smallest absolute move of a Fed decision day since 2021. That great stat coming from Dan Curtis from our production team. But this morning we move higher on yields, about 4 basis points for your front end. 10-year yields higher by 3.5 at 4.3%. Those are your overall markets. Let's get some stocks to watch. Here with us is Bloomberg's Joe Easton. Hey, Joe.
Hey, Danny. So ARM Holdings, really the big disappointment in terms of the pre-market moves today. We are down around 10%. The UK-based company is actually reporting lower than expected revenue guidance for the quarter. It did list in the New York Stock Exchange, disappointing all of us here. And that stock lower today in pre-market. Then in terms of drug stocks, news from Politico yesterday that Trump is potentially looking at reining in the prices once again, this focusing on the Medicare costs. And we are seeing a drop down in pharma stocks. Eli Lilly, AbbVie and also Bristol Myers all down more than 1% this morning. Then finally, AppLovin, the marketing company, offloading its video games company or unit to a UK-listed firm, earning around 400 million cash and a stake in the UK-based company. All of this news and more available, as always, on the Before the Bell opening wrap on the terminal this morning.
Joe, fantastic work as always. We'll catch up with you later in the hour. That is Bloomberg's Joe Easton. Also this hour, in just moments, we'll speak with Lale Akoner of eToro, and also later, Luis Gonza of Fortuna Mining. Two conversations you do not want to miss. But markets awaiting the details of the U.S.-UK trade deal after President Trump teased the announcement in a Truth Social post, writing that he would hold an Oval Office news conference to discuss, quote, a major trade deal with representatives of a big and respected country. For more, let's get over to Bloomberg's Josh Galou. So, Josh, is that big and respected country the UK?
It sure looks like it, and the UK sort of basically confirmed that that's the case. So as you said, in a few hours, we're going to hear from President Trump on what that agreement looks like. There's some speculation that it won't be very detailed. So it could just be an agreement to have further negotiations, sort of creating a framework for talks going forward. That is historically, it takes a very long time to negotiate a comprehensive trade agreement that has to be approved by Congress. So it's likely that it's going to be a bit more targeted, certain industries. The UK, of course, got out of the reciprocal tariffs that hit everyone else because it actually has a deficit with the U.S. in goods, but it still is, getting hit by the steel and aluminum tariffs, as well as the tariff on cars. So they have and services. So if the conversation actually moves further into tech and financial services, the UK is wanting to get ahead of that. So we'll see what the details have, but in principle, we're expecting a bit of a framework here for further negotiations.
And it's not just trade deals that are moving markets this morning, Josh. There was also a great scoop from the Bloomberg team yesterday about rescinding Biden-era AI chip curbs. At least this is the plan. This is the comment that we got from the Commerce Department, saying we will be replacing it with a much simpler rule that unleashes American innovation and ensures American AI dominance. Josh, they sure are talking still in a very hawkish way. Do we know what actually might take the place of the current rules and whether it would be a relaxation?
Well, it does look like a relaxation. You know, the AI diffusion rule that came in under Biden was done pretty late in his administration, and it was seen as somewhat of a blunt tool, even by people close to the administration. So, you know, it has 3 tiers of countries, and the idea was to keep AI chips from reaching China, particularly through third-party countries. And that's where the Trump administration appears to be relaxing. You know, Trump will travel to the Middle East in a few days. And of course, Saudi Arabia and United Arab Emirates are planning to invest very heavily in AI in the coming years. And chips from companies like NVIDIA are going to be key. So it looks like what they want to do by revising this rule is to open up the possibility for countries like those in the Middle East that want to make these big investments to make it easier for them to do so.
Josh, thank you so much for your work this morning. We'll also catch up with you later. That is Bloomberg's Josh Galou. Now, uncertainties abound, especially around trade. And Fed Chair Powell's press conference made it clear that the central bank won't be rushed until there is more clarity.
There's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also, when they do settle out, what will be the implications for the economy, for growth, and for employment? I think it's too early to know that. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments.
Joining us now is Lale Akoner, global market analyst at eToro. Lale, great to see you. And Chair Powell there acknowledging the elephants in the room. That is uncertainty and the tension to the dual mandate, i.e. stagflation. And the market shrugged. It's a bond market that barely moved. It's an equity market that is now only 8% down from the highs. Is that scenario appropriately priced in?
Yeah, look, I mean, the 2 things that they said constantly was the fact that it's very uncertain right now, and also the wait and see mode that they will continue for some time. I think, again, it was a very balanced view coming from the Fed, and there is no clear price action at the moment. But we do not see a rate cut coming in June. I think it is very likely that they will wait until Q4. All depends on, again, whether soft data will impact hard data and whether this is going to be a persistent inflationary scenario or a lower growth scenario. So it's very uncertain, and the market is, again, not moving right now because it's not known at the moment.
But it does seem to move, Lale, every time we get some sort of trade headline. The most recent one being, as our reporter was discussing, something with the UK. On this point, PIMCO's Dan Ivison gave a really interesting interview to the FT where he said, believe Trump, he believes in tariffs. In other words, markets are underestimating this administration's resolve that there will be off-ramps. Instead, they think it might not look that different from Liberation Day levels. Lale, is that a concern to you that this market is too sanguine about the ability of the administration to reach deals?
Look, we do think that there will be a type of a universal tariff rate. However, we also do not expect a more sort of like reciprocal rate that resembles to the Liberation Day. The reason being that, again, the fiscal space is not there. The bond market is going to punish the administration if they come up with something of a more sort of like a swear scenario. So we would agree with the market in the sense that, you know, it will be a more sort of like a balanced trade policy in place rather than a major sort of like a Liberation Day type of scenario.
Okay, so more balance. Does that mean it's risk on, Lale? Are you backing up the truck and loading up then?
Again, be very diversified, we would say. U.S. is still the place to be. Again, there are a lot of high quality liquid companies there, again, cash generating companies. So we are, again, saying that developed markets will outperform emerging markets. Be pro-risk, even in this environment. But again, there are places to hedge your bets again, such as, again, gold. Bonds are a good place to be right now, especially the short end of the curve. A more diversified view, but again, cash is not going to perform very well in this environment.
It is interesting because as we work through the earnings season, some of the commentary we've heard from the tech companies, it's been that their capital expenditures are still happening at a very rapid clip. And then you hear from consumer discretionary companies, or even staples, to be fair, that have talked about a waning consumer appetite. Lale, is a picture emerging of one that feels familiar, that is tech as a safe haven?
Look, the recent tech reports are pretty optimistic. They look like they're monetizing the AI capex. They have, some of them have increased their capex plans as well. So overall, it was optimistic in terms of their guidance as well. But again, we don't know the tariff situation. So we will look for the future quarters to decide whether tech will be a safe place to be. I think, again, you need to be selective. Follow the earnings calls very closely, look at what the CEOs are saying, and again, look at their capital expenditure plans and whether they are monetizing AI. So, yeah, just be very vigilant right now.
So off the back of this earnings season, what we have heard, Lale, what sectors do you like?
We like financials. The reason being that, again, any steepening in the curve is going to help margins. We like healthcare. We like industrials as well. So these are the places that we are looking at right now for our investments. Overall, we do like U.S. value as opposed to growth.
Okay, Lale, thank you so much for joining us this morning. Wonderful to see you, Lale Akoner of eToro. Let's get you some other stories now that are trending on the terminal this morning. Maersk has lowered its forecast for the global transport market, citing macroeconomic and geopolitical uncertainty from President Trump's trade war. The Danish container giant sees the market somewhere between a 1% decline and 4% growth for 2025. CEO Vincent Clerc told Bloomberg that so far the trade war is mostly a U.S.-China issue. Speaking of China, the country is considering a dramatic overhaul of its housing market. Bloomberg sources saying that China is considering requiring developers to offer only completed properties instead of a pre-sales model. That practice, the one of selling homes before they're completed, has been widely blamed for fueling excess supply and debt buildups. Elsewhere, more than 70 people were arrested after mass protesters occupied the main library at Columbia University. The action was organized by a pro-Palestinian student group. The incident also renewed the attention of the administration. Secretary of State Marco Rubio said that the protesters' visa status are now under review. Coming up, weak forecast coming from chip makers. We're going to look at the earnings results from Infineon and ARM. That's coming up next on your Bloomberg Brief.
Then there is the tariff uncertainty, and I repeat and stress the word uncertainty. We believe it's likely that there will be a negative impact on demand in the next quarters, although we do not see it in the numbers yet. We guesstimate that at 10% of our Q4 revenues, which translates, give or take, into 400 million.
Infineon shares rising even after the chip maker cut its guidance, citing tariff and currency headwinds. For more on the chip sector, we're joined by Bloomberg Intelligence senior tech analyst Robert Lee. Robert, thanks for joining us. Great to see you. And look, this is probably something you don't want to hear from your CEO, that we can only guesstimate the impact of tariff disputes. That's the case for basically every CEO right now. But what do you make of the optimism behind the share price despite a cut to the outlook?
Well, I guess it's a general sort of premise in the stock market. It's all about expectations. So even though the guidance, etc., was a bit less worse than expected, but Infineon is a business that's been under pressure for some time for a number of reasons. Just in brief, you look at the last financial year, their adjusted operating profit declined around 30% year over year. And looking at consensus forecasts for this year, it's going to decline a further 15%. Why is that? Three main reasons. One is the FX pressure that's rising. Stronger euro is obviously a negative or a headwind for their export sales. Secondly, is they're obviously tied to German economic growth and the EV and automotive sector in general. And obviously, given the rising threat from companies in this part of the world, in China, that's an issue for them. And then thirdly, obviously, there's the tariff uncertainty that you've referred to. So Infineon is a fine, upstanding company, but I don't think it's the best barometer on the health of the global semiconductor sector. ARM Holdings, however, I think gives you a much better read.
And Should we be worried about that then, Robert? Because the outlook from ARM wasn't exactly rainbows and unicorns.
That's true, but take a step back. We've heard a similar thing from most tech stocks recently. Most companies, given, we've got US tariffs put in one day and then walk back several days later, it's a highly uncertain environment, to state the obvious. So it's incredibly difficult for any companies to budget internally, let alone give external guidance to investors. So I think many companies, not just ARM Holdings, have declined from giving full year guidance at this point, but just given the very uncertain environment that we exist within. So ARM was previously well known and seen as a sort of a bit of a canary in the coal mine because its IP designs go into the vast majority of consumer products globally, or certainly the battery-powered ones. So anything from iPads, smartphones, you name it, ARM's IP is in it. Their guidance for the current quarter fell a little bit below expectations. I wouldn't say that was anything calamitous. But the big thing that's impacting all stocks here is the uncertainty on the second half. I think we've seen a pull forward demand which has benefited the first quarter results. Maybe that will continue into the second quarter. But nobody really knows what the second half is going to look like. And if we see this ongoing uncertainty impacting consumer behavior and consumer confidence, then there's a real risk there. And I think that's why the companies can't give guidance. And I think that's something that the market is increasingly taking on. We just don't know how the rest of this year is going to pan out and what does it mean for next year? That's an even bigger question. So there's huge uncertainty, and markets hate uncertainty, as I guess every viewer on this channel knows.
That is for certain. Hey, Rob, while we have you, late yesterday we learned that Apple is going to be launching or actively looking at revamping their Safari search to include AI. That's something that hurt Google. But they're also in the middle of this court case over antitrust issues of Google being the default browser for search on Apple devices. How does that fit into the overall picture, this news that they're going to start looking at AI in their searches?
Well, I think maybe just on a personal level, I'm sure obviously everybody's played with the AI chatbots, etc. out there. They're pretty good at summarizing things. They're pretty good at giving you a sort of enhanced search, arguably a better, more useful result than many of the mainstream search engines, with Google being a prime example. So that is a real threat to traditional search engines, not just Google, but companies like Baidu in this part of the world. Whether that is going to cause a sustained upheaval within that search sector remains to be seen. But I think Apple's looking to obviously develop its AI offering. It's highly reliant and in fact licenses in Google's technology at the moment. There's a big question mark as to the medium-term impact on that relationship, particularly if Apple decides to go more in-house on that. So again, more uncertainty, big question mark, and I think that's why you've had the stock price reaction there.
All right, Robert, thank you so much for joining us this morning or afternoon in your time. We appreciate it. Robert Lee, ahead of his long weekend. Okay, coming up, we're going to take a look at what else is making headlines around the world, including President Trump's offer to mediate between India and Pakistan. That's coming up next on your brief. Welcome back to your Bloomberg Brief. I'm Danny Berger in New York. So we're awaiting a trade announcement that President Trump says will happen at 10 a.m. The reporting has been that will be in the UK. As we wait the contours of it, Sky News has some reporting out just moments ago that the UK has agreed some concessions on food and agriculture to ease the president's tariffs for the car industry. The details Sky's reporting are not yet clear. This is less of a tariff issue, more of a regulation issue, as the UK doesn't allow imports of, for example, chlorine-washed chicken and hormone-treated beef. That's common in the U.S., but again, Sky News reporting that some of the concessions that will happen in this trade deal are around food and agriculture. Let's get you some other of the headlines around the world this morning and take a look of what we've got on the front pages. The FT, starting with this about Donald Trump's offer to mediate the spiraling conflict between India and Pakistan. The president said on Wednesday that he hoped the two nuclear powers could stop their worst clash in decades. Stocks in India and particularly Pakistan have traded lower this week as the conflict has escalated. Next up, the New York Times leading with a guidance update from Toyota. The world's biggest automaker sees tariffs erasing $1.3 billion from its profits in just 2 months. Only a year ago, Toyota had reported the highest annual profit by a Japanese firm ever. And finally, the Washington Post has this on their front page, that the U.S. is pushing nations facing tariffs to approve Elon Musk's Starlink. A State Department memo seen by the Post stated that the government of Lesotho had hoped that licensing Starlink showed goodwill as it negotiated a trade deal. All right, as we head to the break, a quick check on your markets this morning. We are headed for more gains after hopes of a UK trade deal coming. Again, 10 a.m., that's when that announcement happens. We are 1% higher. Coming up, we'll talk about that new deal with the UK. President Trump teases a big announcement. Will it be the blueprint of what's to come? That's next. From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Trade deal anticipation. Equities get a boost as President Trump teases a major deal likely to be with the UK announced this morning. A win for chip makers. The Trump administration will rescind Biden-era AI chip curbs after industry opposition. And the Fed stays put on rates, waiting for more certainty. Up next, it's the Bank of England. Some more hints of a trade deal, more gains for this equity market. We are at the highs of the futures session, up more than 1% for your S&P, your Nasdaq up 1.3%. More gains for the Nasdaq, likely because of that Bloomberg scoop yesterday, confirmed by officials that they'll be rescinding the Biden AI chip curbs. What does it get replaced with? All of that overshadowing the Fed yesterday. Staying on hold for a third meeting running, patient tone, flagging in so many words that we might get stagflation, and the market shrugged it off. Let's take a look at the bond market, because the reaction in 2-year yields yesterday was the smallest move after a Fed decision since November 2021. Here's the statistic from Nick Timmeros of the Wall Street Journal that Chair Powell said the word wait in some form 22 times at the press conference. Half of those were referenced in wait and see in regards to what it does with interest rates. But we move higher on yields this morning, up about 4 basis points across the curve. Those are your markets. Let's get some stocks to watch this morning. Back with us is Bloomberg's Joe Easton. Hey, Joe.
Hey, Danny. So here's this move lower in ARM Holdings, set to be a rough day for this company. The chip maker missing expectations on its orders for the semiconductors in the latest quarter, and also the guidance looking a little bit weak as well for the UK-based company listed in New York, of course. Then we've also got drug makers on our radar. Trump potentially going to be looking to rein in pricing once again on Medicare-funded drugs, and we are seeing weakness across that sector in the pre-market. Eli Lilly, AbbVie and Bristol Myers all down by more than 1%. Also Moderna slightly lower as well. Then over in mobile apps, AppLovin jumping, the company offloading its video gaming unit to a company based in the UK, in fact, earning around 400 million in cash, and also a stake in that firm, sending that stock up. There we have it, up 14% for AppLovin. Keep an eye on that one in New York later, Danny.
Joe, thank you so much for your excellent work this morning. That is Bloomberg's Joe Easton. Just a quick note coming from Pictet Asset Management, the French asset management giant. They have now downgraded their equity allocation to underweight. They are upgrading cash, saying that we believe this uncertain environment warrants caution. So even with the rally, we do have the bears still out in full force. Now, part of that rally has been expectations for deals and what could be the first of many upcoming deals. President Trump is expected to unveil a trade agreement with the UK this morning. He teased the announcement on a Truth Social post, saying he would hold an Oval Office news conference to discuss a major trade deal with representatives of a big and respected country. Bloomberg's Josh Gallo is back with us. Josh, let's be honest, the trade deal we really want to hear about is China, but what sort of blueprint could a UK deal give us in terms of what comes from here?
Yeah, that's an interesting question. We do expect to see some sort of framework coming out of this with the UK, and this is obviously a position that helps Trump's negotiations with the EU as well, where he's it gives him the ability to sort of drive a wedge there a little bit and show the proximity to the UK and raise the pressure on Europe. That, of course, bleeds over into China and the talks that are coming up this weekend. China came out again and said, the U.S. needs to lift its tariffs. There haven't been a lot of concrete friendly words between the two, so we expect that to remain pretty tense. But with regards to the UK, these trade pacts take a long time to negotiate typically. So it could well be that this is somewhat superficial and either a framework for talks or pertaining to just a couple of sectors that try to show a little bit of progress and some sort of diplomatic solution to the bigger problems that the UK has been having with trade.
Right, and we are getting some reporting from Sky this morning that it seems it will be surrounded around food and agriculture in terms of concessions for the UK. Josh, this is an administration that's extremely busy. We also learned late yesterday that they would be rescinding some of the Biden-era curbs. And the Commerce Department saying this, a spokesperson there, that we will be replacing it with a much simpler rule that unleashes American innovation and ensures American AI dominance. Josh, what might chip curbs look like after this is indeed rescinded?
Well, it seems that the chip curbs are, the main point of the chip curbs was to keep China at bay, because the AI race is really currently between the U.S. and China. And the way that the curbs were structured were to put the steepest penalties on China and then also other countries that might provide the chips to China or the technology. So Trump is about to head to the Mideast, and countries like the United Arab Emirates and Saudi Arabia are planning to just invest tons of money into AI in the coming years. They want access to American technology like semiconductors from NVIDIA, and we expect Trump to be very focused on that relationship with those two countries going forward. And I can imagine out of the new curbs, we're going to see some movement in those tier 2 countries that they belong to.
Josh, thank you so much for your excellent reporting this morning. We appreciate it. Bloomberg's Josh Gallo. Now, as we await that U.S.-UK trade deal, the Bank of England is expected to announce its rate decision in less than 2 hours. Let's get over to Threadneedle Street, where our UK correspondent Lizzie Burton joins us now from outside the BOE. Lizzie, what are we expecting this morning?
Well, in terms of the conversation we were just having, we've been asking ourselves, Danny, whether this UK-US trade pact even moves the needle for the BOE. It certainly thrown a spanner in the works for Andrew Bailey at the press conference. But the answer is it probably doesn't, because, look, they already voted on today's decision before this Truth Social post came out. And beyond that, it doesn't really change the outlook for the UK economy, according to most economists. Excuse the police car just going past that I've been speaking to this morning, because, look, the global outlook remains one of elevated uncertainty and depressed demand. As you said, Danny, the focus really is on whether we get a US-China trade deal. And until you do, you're still likely to see the UK market flooded with cheap goods from China, which is, of course, disinflationary. And when you've got that depressed demand, you've got lower oil prices, again, disinflationary. So the argument that we are expecting the BOE to make today, that tariffs mean lower growth and lower inflation in the UK, seems to still stand.
Lizzie, there feels to be something extremely symbolic of you talking about the UK economy as literal sirens are going off in the background behind you. But on this point that you're talking about, like we heard it from the Fed yesterday, this uncertainty, you're mentioning it too. So just how dovish can the BOE be at this point, given the lack of clarity on how things actually will look in even a week's time from now?
Yeah, look, Danny, I'm expecting to be playing uncertainty bingo at this press conference from the BOE later. The dovish twist could come in two forms. Now, it could be the vote split. We've surveyed economists, and 20 out of 32 of them reckon that one member of the Monetary Policy Committee at least, is going to vote for a jumbo cut. And it'd be interesting if that isn't just the Archdove Swati Dhingra, but maybe the Deputy Governor, Dave Ramsden. He's got form pivoting the committee. Maybe it's Alan Taylor, the newest member member of the Monetary Policy Committee. And yes, the Governor, Andrew Bailey, has said to us the vote split isn't some sort of communication device, but I am sure the market will take it as one if you see more than one member going for a jumbo cut. Then you've got the guidance, and at the moment they're describing the rate path ahead as gradual and careful. Careful because they wanted to take account of Trump's tariff policy. If they drop that, maybe it suggests that the balance of risks is skewed towards a slowdown in growth rather than a rise in inflation. And if they drop the word gradual, that opens the door potentially to a June cut. And Danny, that would be the first back-to-back cut from the Bank of England since COVID, and before that, the global financial crisis. So the tone today from the Bank of England could be way more dovish than we got from the Federal Reserve last night.
Lizzie, really looking forward to your coverage when that decision comes in about 1.5 hours' time. Lizzie Burden. And just a programming note, the decision will happen at 7:02 a.m. Eastern time, that 2-minute pause for a VE Day reflection. Okay, let's get to some other top stories that are trending on the terminal this morning. Maersk has lowered its forecast for the global transport market, citing macroeconomic and geopolitical uncertainty from President Trump's trade war. The Danish container giant sees the market somewhere between a 1% decline and 4% growth for 2025. CEO Vincent Clerc told Bloomberg that so far the trade war is mostly a U.S.-China issue. Speaking of China, it is considering a dramatic overhaul of its housing market. Bloomberg sources say that China is considering acquiring developers to offer only completed properties instead of a pre-sales model. That practice, the one of selling homes before they're completed, has been widely blamed for fueling excess supply and debt buildups. More than 70 people were arrested after mass protesters occupied the main library at Columbia University. The action was organized by a pro-Palestinian student group. The incident also renewed the attention of the administration. Secretary of State Marco Rubio said that the protesters' visa status are under review. Coming up, we turn back to the state of these markets and gold specifically. Fortuna Mining CFO Luis Ganoza will be joining us to discuss impacts to the mining industry. That's coming up next on Bloomberg. Welcome back to Bloomberg Brief. I'm Danny Berger in New York. Now, the uncertainty surrounding a global trade war has driven a surge in gold prices this year. Let's get to this month's CFO briefing. And as always, we're joined by the wonderful Nina Trentman, the editor of the CFO Briefing newsletter. Nina, great to see you this morning.
Thank you for having me.
And we're focusing on Fortuna Mining, reporting sales for the first quarter that met the street's expectations and delivered a new record quarter of free cash flow. Fortuna Mining is headquartered in Vancouver, operates mines in Argentina, Mexico, and Peru, among many other countries. I'm pleased to say that the CFO, Luis Ganoza, joins us now. Luis, thank you so much for seeing us this morning and stopping by.
Glad to be here. Thank you.
So just how big of a boost are you getting from gold prices that are just seeing record after record?
Yes, absolutely. We reported, as you mentioned, a record free cash flow for Q1 2025, $111 million, over $290 million of sales. That's free cash flow, I should say, before new developments and growth initiatives. And that's 38% margin, right? Quite significant. We reported 20 cents per share, which again is a record for us. And if you think in terms of what we would expect for the year, considering Q1 metal prices, that's still free cash flow given the timing of other operating items like tax payments. That's still going to be 30% margin over sales, so quite significant.
Where do you see gold prices going from here, if you want to make a
yes,
guess?
Well, that's the big question, of course, right? We all are quite aware that the world as it is today is quite conducive to the type of metal prices we're seeing, the trends we've been seeing, geopolitical uncertainty, economic, political risk all over the world. But the way we see things, where things go from here, falls more in the realm of the unknowable, right? And we really focused on what we can control, which is cost. This business is all about cost containment and setting yourself up to operate as much as possible within the average of the cost curve for the industry, right? So that's our aspiration. That allows you to still generate decent profits during the down part of the cycle, and of course harvest in times like this.
You recently sold 2 assets in Burkina Faso and also in Mexico. I'm wondering how you're thinking about potential deal making. Like, are you on the lookout for potential targets?
Yes, absolutely. So that's 2 mines that in principle we will seek to be replacing. A big tool for that for us is M&A. And we currently operate in 2 important gold-producing regions in the world, LATAM and West Africa. And that really expands the universe of business opportunities for us, right? In this business, most companies will be focused in one region of the world. Some of our peers, right, advertise themselves as one business, one country, one metal. So for us, it's quite different. We've been in West Africa for over 3 years now. We feel very comfortable there, and West Africa is one of the fastest growing gold producing regions in the world. So that creates a wide range of opportunities, and we're quite active today seeking new ways to deploy capital.
Luis, in that answer itself, you mentioned just the huge breadth of countries that you operate in. You're, of course, headquartered in Canada as well. We're in this moment. We're driven by the U.S. The trade lines are being rewritten. Relationships between different countries are being rewritten. The way capital flows is getting another look at. Has it changed for you as a global business operator?
So the answer is twofold. One is we really don't see ourselves as a global operator. We are a relatively small company in the big scheme of things, right? So our focus is on 2 regions, LATAM, which is a historic mining region, and West Africa, right, which is a relatively contained region within Africa as a whole. So you will not see us hunting for projects really all over the world. That's one. That has important benefits. It allows to leverage on your knowledge and expertise of the regions in which you operate, right? So that makes a lot of sense for us. And with respect to the question of tariffs, we don't see any impact today for us in the business, right? Any direct impact is something we're monitoring, but so far, I mean, there's nothing to report.
How are you monitoring that? Obviously, it impacts the gold prices. We've heard from other companies that have done things like assembled task forces specifically to look at this. Is that something you're doing?
We are in that process. I think we've done through an initial scan of what are the main elements of our supply chain that could potentially get impacted. And I mean, on a first company-wide exercise, we really haven't seen anything of significance that is worth reporting or being concerned about, right? But as things change, things are being very dynamic. That's something we'll continue to focus on, right?
You also operate in Argentina. I'm curious to see how you're viewing the business environment there after 16 months about that time with Javier Milei making a lot of changes in the country.
Yes, absolutely. So in Argentina, for an exporter like us, it's really all been about the peso appreciation over 2024 and the ability to repatriate funds, right? Now, beyond that, we all want Argentina to do well. And the first phase of Mr. Milei's program in terms of inflation containment has been successful. I think that's widely accepted. And the key thing comes, the key next phase comes this year as Argentina needs to restart growth for this to be sustainable. It needs to start accumulating foreign currency reserves. So that's what we're watching for this year. And ultimately, the removal of the capital controls will be a function of that, in our view, right?
Just curious in terms of buyback spending and shareholder returns. I think you recently renewed your share repurchase program. Like, talk a little bit about that.
Yes, we have an NCIB out there. We were very active in Q4 of last year, where we saw opportunities in the market, and that again will also be a function of conditions in the market and potential alternative uses of funds, right? We are in a transition phase. As I mentioned, we need to replace potentially 2 assets. We do have plenty of liquidity today, so return to shareholders is an important element of our strategy. As far as repurchasing shares in the market, it will be very much a function of what makes sense at a given time, right?
Hey, Luis, before we let you go, one of the oddities of what gold has done is the premium of it in the U.S. And you had these crazy stories about filling planes up with gold, trying to get them over to the region. Other commodities also coming from South America, ships absolutely stacked with the various commodities. I wonder how much you keep track of that and whether those weird sort of tensions are still present in the global shipping and airline industry.
Honestly, not really. A lot of weird things start happening when gold hits $3,000, right? Yeah, and as I mentioned, for us, we're projecting a great year. I mean, there is uncertainty in the gold price always. It's volatile, but in the short term, we do have the sense that things are going to.
If I can jump in, does that uncertainty sometimes cap how much you're willing to spend on capital expenditures? Because obviously you have new projects you're eyeing and that sort of thing.
Yes, absolutely. For us in particular, when we think of gold price and new investments, our view is very conservative. When we look at deploying capital or assessing a new project investment, we are looking for an asset that can yield 20% plus returns over the life of mine at $2,000, right? So it's not the time in our view to start using $3,000 or even $2,500 per ounce to think of returns over the next 8-10 years, right?
All right, Luis, thank you so much for joining us this morning. We really appreciate your time. That is the Fortuna Mining CFO, Luis Ganoza. Nina, thank you as well.
Thank you.
Please check out her newsletter. That is Bloomberg's Nina Trentman, the CFO News Briefing. And you can find more, again, with her interview with Fortuna Mining. You want to subscribe to that at bloomberg.com/newsletters. All right, some breaking news to bring you. President Trump has confirmed, it would appear, that the deal we're going to get will be from the UK today. In a Truth Social post, just writing, today will be a very big, exciting day for U.S. UK. Again, the assumption is that 10 a.m. when he makes the announcement, it will be with the UK. Now, as we had to break, just some pictures for you from the Vatican. Black smoke is coming out. I don't know if you can see it in those pictures. It was there. There you go, just a moment ago. So no new pope for you yet as the conclave continues. This is Bloomberg. Let's get you set up for your trading day on this Thursday. The BOE will be announcing its rate decision at 7:02 a.m. Eastern, just shortly after a 2-minute pause, a moment of silence for Victory Day, Europe Day. Then another round of U.S. jobless claims that comes at 8:30 a.m. And tech executives will be speaking before a Senate panel at 10 a.m. That includes Sam Altman of OpenAI and Lisa Su of AMD, among others. All right, that is it for your Bloomberg Brief. Things to keep an eye out. 10 a.m. We will hear from the president about a big deal in a Truth Social post just saying it will be a big day for the UK. Surveillance up next.